Dollar General reports second quarter earnings before the markets open on Thursday. Here with a preview is Ken Perkins, who covers Dollar General for Morningstar. All right, Ken, what are you looking for in Dollar General's earnings?
I think the main thing we're looking for is the traffic trends from Dollar General. Clearly, the company has done a really good job of driving people into the stores with things like tobacco, and it's benefited from the recession as people have moved down to the cheaper alternative that the channel offers. And so we'll be really focused on the sustainability of those traffic trends and how the company's been doing in sustaining that over the next quarter.
All right, we'll talk about the recession in a moment, but you also say competition from Walmart could threaten Dollar General in terms of same-store sales, right?
Yeah, we think so. Not just Walmart. You clearly have the merger with Dollar Tree and Family Dollar, but Walmart has been losing share not only to e-commerce but also to the dollar stores who have set up stores in between Walmart supercenters. And to combat that, Walmart has been rolling out its small formats recently with the Neighborhood Market, which is a traditional grocer and pharmacy, and then smaller formats, which used to be dubbed express formats, really to combat the dollar store threat. And as Walmart adds those stores, we think that there will be more competition in the channel as they try to appeal to the convenience that these stores offer.
All right, now I know you have a hold rating on the stock, but given the volatility in this global sell-off that we've seen recently, I mean, how should investors view the stock now?
We think that the shares are still a little bit overvalued relative to our fair value estimate, but not much. And we do think that the company is structurally advantaged. You have basically a $10 basket size at Dollar General. And so with lower gas prices, it only takes one incremental item for each customer to purchase to get 10% same-store sales growth for a concept like Dollar General. And so we think that the company itself is structurally advantaged, and we see a lot of opportunities to still add stores in the market. And so from that perspective, we are bullish on the fundamentals. We think that investors should just look to buy at a larger margin of safety, given that there are competitive threats from the merger and the consolidation and scale advantages that Dollar Tree will benefit from, as well as Target rolling out small stores and Walmart continuing to expand its footprint in the small format.
All right, and what price do you like Dollar General at?
I think we would think it's more attractive probably in the $60 range. That gives investors some safety against the competitive threats from margin contraction. These are the sort of things where right now you have a lot of advantages to the small format, and so you have a lot of square footage coming on the market. But if the economy were to slow a bit over the future, you'd have a lot of square footage coming onto the market at the same time where consumers are spending less. And that's the risk that you face to investing in a name like this, is that downside. And we think buying in the $60 range protects investors from that.
All right, now in this sell-off that we saw, this week and last week, certainly many investors out there are trying to get defensive, move into some of those sectors. So what do you think about Dollar General as a defensive play as investors increasingly worry about global growth problems?
We think so. The company is obviously US-centric too, so you have the benefit of the format appealing to lower income consumers and to the convenience of the stores as a benefit to them. We see Walmart similarly. We think that while these macroeconomic headwinds are a concern, there is a defensive nature to the products that these companies sell, and particularly again for a company like Dollar General where you have low prices per items and a small basket size. We think they're better insulated from some of these pressures than a lot of other companies out there in the market.
All right, Ken Perkins from Morningstar with a preview of Dollar General's earnings. Ken, thank you.
Thanks for having me.
I'm Scott Gam, and you're watching The Street.